Hey everyone, it's Scott here. We're going to be unpacking the latest federal budget. It is alarming.
We are picking up momentum. The Australian economy is genuinely turning a corner.
And I'm going to be talking about, will this budget lead to an economic crash here in Australia, and also what it means for the housing crisis, and also rents potentially increasing 200 to 300% in the next 5 to 7 years. Let's go through the whole thing. This is really big news. Now, the first thing I want to say, guys, is that our national debt is skyrocketing. We're going to hit 1.2 trillion of national debt in the next few years. The big issue with this is that our interest repayments on this debt is set to hit almost 40 billion a year. And I'm going to cover how this is going to impact you and your cost of living and your future lifestyle in this video. In addition, no money in this federal budget was allocated to the housing supply crisis. Yes, we did do some things to help people get into their first home, and those initiatives are welcome. But the big problem in this country is housing supply, and there is literally nothing significant in this budget to help with housing supply. First of all, guys, let's unpack the national debt. Now, our national debt is set to hit 1.2 trillion. We're sitting above 900 billion right now. Now, this equates to about 37% of our GDP in terms of the debt to the GDP. Now, if we look internationally, I'll just put up this chart. You can see here with light countries, small baby countries, which we are a small baby country. So if you look at countries like Sweden and New Zealand, other countries like that, you can see that we are actually above them. When we compare against countries like the juggernauts, Japan, UK, USA, you can see here that we're well behind, but we do not have the strength of these countries' economies, the population base, to be able to carry this much debt and afford the interest repayment for this debt. So our annual debt repayments are set to reach about $38 billion every single year. But let me put that in some context for you. We spend about $16 billion every year on the PBS, the Pharmaceutical Benefit Scheme. This makes medicine affordable for all Aussies, and it reduces the cost of medicine to a top rate, so you'll never pay over that. We spend $16 billion on that, which if you look at our debt repayment, it's 2 to 3 times more than what we spend on PBS. Imagine if we didn't have that debt, what more we could do for medicine. Our infrastructure spend is just 15 billion. Now, we know to increase housing supply, we've got to open up more cities. We've got to have Geelong, Wollongong, Newcastle. We've got to have the outlying cities and towns in Queensland open up for more population and more building and construction. We need infrastructure, roads, rail. We need all of that to make that happen. And we only spend 15 billion on that. But on our interest repayments, we are spending almost 40 billion. Imagine if we didn't have that debt, we'd have 40 billion extra to spend on infrastructure and ease this housing crisis. Guys, for childcare, we spend about 12 billion a year. There's 12 billion allocated in the upcoming budget. And again, compare that to our national interest repayment of almost 40 billion. Imagine what more support we could give Aussie families for childcare if we didn't have this enormous debt. Now, the more debt we have over time, and I don't see a plan to cut the debt, because the scary thing about the debt is to repay the debt, we've got to create a budget surplus, which means we've got to spend less than what we bring in tax revenue. And the problem is that for the next 4, 5, 6 years going out into the future, it looks like we are going to have a deficit in our budget, which means the national debt will continue to grow. What's scary on top of that is that if we have big shockwaves in the world, if USA go on with all of this tariff talk, and if we have more global issues and wars, and maybe we have another pandemic or something like that, we will need to stimulate the economy through producing even more government debt. So to be safe and secure in this country, we want to eliminate this debt. Now, let's take a look at how good we are at spending our money. So you can see here that after achieving a 9.3 billion surplus in 23-24, the budget has actually swung back into the red. So for 24-25, we were about 30 billion. We overspent by about 30 billion. 25-26, we're forecast to spend again by about 30 billion, but this is going to continue to increase and get worse from here on out. Take a look at this chart for the future of surplus deficit on the budget. What was missing from this budget was any statement, any direction, any strategy, any goal to get us back into surplus. It was non-existent in this budget. That's scary. Let me just take a minute or two to quickly break down the budget. So we are expecting about 785 billion of expenses for the government. This is up by about 70 billion from the previous year. So we have increased our spending by a huge amount, by 70 billion in just 12 months. And the government has spent this in key areas where we want to see money spent, but we really do not have the money. So the question has to be asked, why are they spending this money in an election year? Is it to get votes, or is it in the long-term best interest of Australia? Now I'm going to put up a couple of charts which actually show you the budget breakdown. As you can see here, welfare, pensions, Centrelink is our number one expense, and you can see all the other expenses there. Okay, so why are we in a deficit? Let's break it down. We've had big spending on the cost of living relief, housing, energy, rebates, and infrastructure. Total tax cuts, $17.1 billion package. Falling commodity prices have meant that we've collected less revenue, and of course, higher interest costs on our national debt, 30 billion and rising. Now, what's very concerning is what I believe the number one issue facing Aussies is the cost of housing, whether it's to buy and pay it off or whether it's to rent. This is a national crisis, and there is literally nothing significant in this budget. Guys, there is nothing in this budget that's going to increase supply. There's no incentives for renters. There's no incentives for builders and developers to build and construct new property. There is nothing in here that's suddenly going to boost that supply of property. Now, remember, the government came out and said we need 1.2 million homes to ease the housing crisis over 5 years. That's 240,000 completed homes every single year. So far in the last 6 months, we're only at 45,000 completed homes, which only puts us on track to do 80,000, 90,000 for 12 months. So we are well behind the 240,000 homes needed. And there is nothing in this budget, guys, that's going to help us to get to 240,000 completed homes every single year for the next 5 years. This is great news if you're a property investor, because we've got population growth and no housing. This is going to lead to increase in rents, increase in property house prices, but it's incredibly bad news for all of society, for all of our renters, and for all of those people trying to get onto the property ladder and climb the property ladder. It also starts creating wealth in the hands of those that own the asset of residential property, and those that do not own that asset are going to fall further and further behind in terms of the wealth gap here in this country. So there were some things done. So first of all, the government is giving a $10,000 bonus to companies that take on an apprentice in the trades, building and construction, okay, because we do have a labor shortage there. That may help us to get some, but not all of the workers that we do need. There's also $54 million for prefabricated housing to help the research and development and expansion of that. Again, that's a construction method. Yes, it helps you build faster. Yes, it helps you build cheaper, but where is the land and the infrastructure to build on? No money for that, which is actually the core problem. The help to buy scheme. Now, this is where the government will joint venture with you. They'll buy a house with you for you to live in. They will own 30 to 40%. They'll contribute to it. You only need a 2% deposit. It's for low-income families, single-parent families can get into this, but there's only 10,000 spots a year. And we do know that that will help 10,000 lucky people, but it will not ease the problem across the whole country. The Housing Australia Future Fund. Now, this is $10 billion to create 30,000 socially affordable homes over 5 years. Now, after 1 year, we only have about 340 of those homes, and pretty much 300 of them are not even brand new constructed homes. So in 1 year, $10 billion has done literally nothing. Energy and gas. So there's a $150 handout to help cover some bills, but there's no long-term strategic plan to bring these prices down. There's no talk of it, there's no funding for it. What this means that Aussies going forward can expect higher and higher energy prices. In terms of the groceries, no direct relief there. They've given some more money to the regulators to keep an eye on Woolies, keep an eye on Coles, because they are not the problem. They only make between 1% and 3% profit. That means for every $100 that these supermarkets collect at the counter, only $1 to $3 is their profit. So even if we cut their profits in half, the maximum that this can save you at the checkout is about $1 for every $100. This is not going to solve the problem. It's the inputs here. It's labor, cost of materials, cost of energy, cost of transport. Those are the big issues, and there's no money for that. Now let's take a look at the tax cuts. I'll put up this chart so you can see the before and the after on who's impacted by these tax cuts. What this means is the average worker is going to get between $250 and $550 per year in tax cuts. This is welcome. This is going to help, but it is a small amount in comparison to what's going to happen to rents, what's going to happen to housing, what's happening to energy, what's happening to gas, what's actually happening to all of these costs in our society, okay? It's very little. It does not go far enough. Pretty much, guys, this works out to be $5 to $10 per week. That's not even enough for a big value meal at Macca's. Okay, so guys, I'm gonna cover off just some key budget measures for you. So 17.1 billion in tax cuts over the next 4 years, cutting the 16% tax rate to 14%. Again, guys, this is less than a value meal from Macca's, does not go far enough. 17.9 billion on Medicare to boost bulk billing. 1.8 billion for public hospitals, 644 million for new urgent care clinics, 793 million for women's health. More money for infrastructure, including 7.2 billion for the Bruce Highway. More cost of living relief, including extending electricity rebates for another 6 months. 800 million to raise the income and price caps for the Help to Buy shared equity scheme, although it does remain capped to 10,000 per year. So guys, let me know in the comments what you think about the budget. Do you agree or disagree with anything I've said? What is your outlook? What is your take? What do you think this means for the future of Australia? And do you think that without any plan here to solve the housing crisis, without any plan to address our growing national debt, will this lead to an economic collapse here in Australia in the future? Let me know in the comments.